In this episode of We Talk Money, we're asking and maybe even answering the question, are room temperature superconductors about to flip the world on its head, or is it a big nothing burger? Over the past couple of days, I've gone from crypto trader to superconductor expert, thanks to the help of ChatGPT. And so we're going to dive into that. We've also got some crypto stuff to talk about. We've got earnings. We've got macro data. What a summer, never a boring day in the markets. There's always something popping off. And one thing that I just wanted to share real quick, because, in all seriousness, I have absolutely no clue about superconductors until Travis wrote about it for the first time last week in the Daily Doe, and the LK99 stuff started to pop off. But I feel like in our lifetime, we've had a handful of opportunities to build, life-changing gains and generational wealth. And I feel like if this LK99 thing is legit, this could be one of those. So buckle up, guys, and let's dive in. And Trav, I want to kick it to you because you were the first one to really put this on everybody's radar. Is this real? What is it? Maybe just do an explain like I'm five for everybody that's thinking about this stuff going, okay, what is it and what are the potential implications?
Yeah, great question. So caveat, I'm not a physicist, but interestingly enough, I have a kind of a long history with superconductors, and particularly a couple of companies in the superconductor universe because of some work I did at the hedge fund probably, I don't know, a decade ago or so. It's been a good amount of time. So I know a little bit. I know enough to be dangerous, I guess, on the investing side. On the science side, obviously still lacking quite a bit of knowledge. But I would say today, I'd probably put like a 20% chance or 20% probability on this idea that LK99 is a new amazing superconductor that will revolutionize industry. Now, to step back at a high level, superconductors are potentially extremely useful tools that would give us pretty amazing breakthroughs in basically anything that uses electrical energy. So, I mean, you think about everything from batteries to the electrical grid to, transportation to potentially even things like nuclear fusion. I'm a little bit more skeptical on that. We can talk about that. But typically, with our traditional electrical generation and traditional grids, we lose a lot of energy to like heat dissipation. We lose a lot of energy to, resistivity. And so, we don't really utilize superconductors that much because most superconductors operate at like really, really cold temperatures. We're talking like, hundreds of degrees below zero. And so these things are very, very expensive. They're used in very specialized use cases. But the properties of superconductors essentially mean that if you could use them in normal applications, you would reduce a lot of the electricity loss, a lot of the heat that is given off by traditional electricity generation. And you could potentially even create like super batteries, because with no resistivity, you have like no loss. You could essentially store energy in superconductor coils for long periods of time with essentially no loss of that energy. So definitely amazing implications if we could use superconductors more broadly. The problem, of course, has always been that they don't really operate at normal temperatures. They operate at hundreds of degrees below zero. And so they only have very specific applications that are very expensive.
Well said. And can I just share briefly my work that I've been doing with my assistant, ChatGPT?
You guys have gone from investors to scientists real quick.
Oh, yes. Indubitably.
That was a great explain like I'm five, Travis. Got to give it to you. Thank you.
Yeah, that was really great. I mean, this was the paper that's been circulating, and the title is Origin of Correlated Isolated Flat Bands in Copper Substituted Lead Phosphate Appetite. I was like, okay, ChatGPT, assume I know absolutely nothing about science. Please reword that for me and then digest this paper and kick out what they're trying to say. So here's, I think, an easier just headline for that article. Understanding how unique energy levels, which could help electricity flow without resistance, come into being in a special kind of copper lead crystal. Okay, so basically what this was saying is by replacing some of the lead in an apatite with copper, they can create a unique structure that could potentially conduct electricity super well, like a super highway for electric currents without stop signs or traffic lights. This is what scientists call superconductivity, right? So if this actually is real, I asked ChatGPT to give me a list of questions that I could ask it to show really how this could like flip the world on its head. And some of the questions were, how could superconductors revolutionize transportation and the medical field? And, could it solve the energy crisis? And some of the things that it kicked out were pretty awesome. I think some of these may be far-fetched, but magnetic levitation on trains, obviously electric cars and, space travel, and could create lightweight motors for aircraft and ships, improving efficiency and reducing greenhouse gas emissions. So this could have, I think, implications from everything from consumer electronics to massive transportation systems. I don't know. I mean, I saw another tweet thread that was talking about there's 3 potential levels of how this could work. And at the smallest level, it could have $1 trillion or $2 a year impact on the economy. Trav, if anything, do you think it'll hit one of those 3 levels? Or I know you said, 20% probability? Does that mean like it's binary, like it's going to work or not? Or do you see this working at a small level and then maybe getting better over time?
Yeah, that's a great question. No, I think the 20% applies to the idea that this truly is a superconductor that could be utilized broadly. Because you're right, even if it does show properties of superconduction, it might not actually be that usable from a practical standpoint if there are problems replicating the material, if it can't be mass produced, or if there's effects that kind of limit the superconductivity or make it only superconductive under very specific conditions. And so that is all potentially very likely. It's likely that even if you discovered a room temperature superconductor, it might not be as useful as you might initially think. The other possibility, of course, is that this was fraudulent, or that the paper's authors did something that was a mistake and they thought they were getting superconductivity when they were really just getting other properties that can look like superconductivity, like say diamagnetism. And we won't even delve into those topics because we could go on tangents for hours. But yeah, basically I'm saying that there's probably about a 20% chance, and that's up from about a 10% chance last week. When this first hit my radar early last week, I kind of dismissed it. I said, well, typically we see 1 or 2 of these every year in various fields. Like I've seen, things come out of labs where they say, oh, we found a new material that makes solar panels 40% efficient instead of 12% efficient. Or we see something like, oh, there's been a breakthrough in nuclear fission or quantum computing. And yet none of that ever makes it out of the lab. Or it turns out in a lot of those cases, it turns out that the discovery was actually an accident that was polluted by some material that got into the sample or something like that. And so usually I approach these things with a lot of skepticism, but I started to get a little bit more excited when we started to get some activity on Twitter from some real scientists who were starting to say, actually, there might be something to this. There might be some scientific basis behind this based on what we know about certain crystalline structures and various things like that. We got a paper this week dropped by someone from the Lawrence Berkeley National Laboratory, a very legitimate scientific research institution here in the US. And that paper basically said, yeah, there could be a theoretical foundation based on these scientific principles behind superconductivity in this material. So that was another thing that kind of led us to think, maybe this is real. But still, it's TBD. We have a few replication efforts out there that we know of, and probably a lot more replication efforts out there that we don't know of happening across various labs out there. The cool thing, though, is that we will likely know if this is real and can be replicated within days, at most weeks. So I'm really interested to see how it plays out.
Nice. Well, it looks like the markets are also really speculating on this. The one of, if not the only ticker that actually has superconductor in its name went absolutely nuts over the past couple of weeks. And it's AMSC, American Superconductor Corporation, went from actually had a really nice breakout pattern around $7 or $8 and made it up to 17. And then today is pulling back really hard. But Trav, I think you have an extensive history with this stock, if I'm not mistaken.
Yes, a very long and storied history, shorting this for a lot of profit.
Nice.
It's got a really interesting story. This company has been public since the 90s, since the mid 90s. So it is a very old corporation, primarily based in Massachusetts. They have some labs in other places as well. But they have, I guess it's hard to describe it because it's both a legitimate company, but it's also a company that has dabbled in fraud over time. And so, back in around the I guess it was early 2000s and then into like the 2010s, I guess you could say. I had followed this company pretty closely, done a lot of research work, and there was a pretty big drop off in the share price because they had reported like all these ramping revenues. They had gotten into providing control systems for wind turbines. Mostly before that, this company made superconducting cables that they provided to various labs that were working on, very specific and, just very limited use cases of researching superconductors. And so it's not like there was a big market for what they were producing because what they produce is very specialized and very expensive. So the company was a pretty small under the radar company, even though they were public, but then they got into this wind turbine thing and they started providing control systems for some big wind turbine manufacturers in Asia, in China and India specifically. And basically what ended up happening was we figured out that they were booking all this fictitious revenue to one of this large wind manufacturers in China called Sinovel. And so the stock had gone parabolic because they were reporting all these revenues. But if you looked a little deeper, they weren't actually having any cash flow. And so we were like, okay, what's going on here? They should have cash flow if their revenues are going parabolic. It turns out, though, their accounts receivable were also increasing even faster than revenue. So they were booking all this fictitious revenue. Turns out they weren't actually receiving that revenue. Then they went on to blame the Chinese wind manufacturer that apparently they weren't paying them. And so this went into a court battle for years and years and years. And ultimately it settled out of court, and AMSC got like a small payment from the Chinese company, but it turns out really had overstated the revenues and essentially committed some fraud. And so the share price collapsed over 90%. Long-winded story, I know, but what I think is important to understand here is that this company does have legitimate expertise with your traditional superconducting cables, but they have also done some shady things from the business side. And so that's important to understand as you're approaching thinking about investing in AMSC.
So do you think these guys are positioned that if this LK99 is legit, are they potentially a huge benefactor of that?
I do think there is in-house expertise here, and it's funny too, because, if you're thinking about it from the investor lens, it's kind of clear already that this company will be a beneficiary of investment dollars one way or another, even if they really aren't the player that's going to ultimately be the winner at the end. It's kind of like the AI space. We've seen a few of these public AI companies like C3.ai, which had 0% revenue growth last quarter, and yet they have the ticker symbol AI and the stock is up more than 4x this year. So I think that from an investor lens, this is a stock that can very much continue to work. It's down big today. It's giving back some of the 60% gains it had yesterday, but I think it's something that could continue to have some pretty massive runs. As far as will the company actually see real revenues, I think it's years out at the earliest, because even if LK99 turns out to be the real deal, it's going to take years to bring that technology to actual fruition from a physical world perspective. And is AMC going to be that company? I think they're going to try. But I think there's going to be a lot of other entities as well that get into this, including bigger entities that already work on traditional electrical grid infrastructure that are multi-billion-dollar companies. And so I would be skeptical that AMC ultimately ends up being a winner from a business perspective, but that doesn't mean the share price can't go parabolic.
It's a pretty small market cap. Like, from what I'm looking at, it's a pretty small company.
Less than $1 billion market cap. In fact, I think today it's probably closer to 400 or 500 million, if I recall correctly. Let's look it up.
So I wonder who are the other existing players that could really benefit from this, like Tesla, like Nvidia, maybe. Like, I guess this is just, it's so far reaching that the implications are like really hard to quantify. But like you said yesterday, I think it's like we're not even in the first inning yet, and we're just trying to figure out, like, is this game even going to be played? And if so, there's going to be massive opportunity and a lot of disruption, right?
Yeah, that's completely right. I think I said we're basically in batting practice, to use a baseball reference. We're not even in the first inning yet.
Yeah.
I guess
Well,
that's
exciting,
one
man.
of the exciting parts about like investing in something like an index, right? Like an S&P 500 or a NASDAQ index. That's been one of the benefits, is that you're constantly benefiting from innovation, technology, coming online and things changing. And if you're not the type of person that's going to pay close attention to these individual names, that's a great way that we've all been able to capitalize on things changing. Because one thing we know is, I don't think technology is going to stop. It keeps changing, and we can benefit from it. So
Yeah,
that's
great point.
exciting to know that that's happening on the backside, especially with all of the AI and the EV movement and just everything. It just sounds like it could be a pretty big deal for a lot of
Yep.
companies.
Yeah, we have
Nick, you wrote about
several hype cycles.
Yeah. But AMSC might be something that could be tradable over the next few months as this kind of gets figured out. So
Yeah.
not
Yeah,
investable,
there's
but
also a
tradable.
couple other like sympathy plays that I was keeping an eye on. Maybe we can write about some more opportunities in the next Daily Doe to dive in and see which potential stocks could pop. I know there's a lot of low floaters and small caps that have been moving on this news, but keep an eye
Well,
on
there's
it.
a lot of small caps that have just been moving, period. The speculation is back. It's been pretty surprising, actually. I posted a watch list in the community of small caps that some of them are crappy companies, some of them are maybe not, but we've got a lot of charts on deck here that traders are probably salivating over.
Yeah, one thing you were talking about in today's Daily Doe was how the market is beginning to kind of trickle down capital into other sectors, right? So over the past, really, I guess, couple of years, the magnificent seven has been holding up the index of, basically FANG plus. But you were saying here, I guess, travel, like builders and cruise and airlines, have really been starting to get some juice as well.
Well, what I was really pointing out, obviously, the Magnificent Seven, they're such large corporations that they're, weighted so much heavier, and they're going to move the market. But when you look into what are the best top 10 performing stocks in the S&P 500 year to date, half of them are not big tech. Half of them are things like cruise lines and home builders and Align Technology, which is invisible braces, things that I guess the point I was trying to make in the Daily Doe newsletter is that if you hear a lot about the Magnificent Seven, but if you pull back and look at the best performing stocks, the stocks that are truly, really outperforming the S&P 500 returns of sub 20% at this point with this pullback, it was just surprising to see all three major cruise lines were on that list of the top 10. Pulte Group, which is a home builder, was in the top 10. Align Technologies, and there's one I'm probably missing, but it was half of them not being big tech outperforming the S&P 500 dramatically. So it was just kind of surprising, because all we've been hearing is the narrative about the Magnificent Seven, but really there's been a lot of individual names that have not been big tech that have performed very, very well this year.
Yeah, we're seeing the indices pull back pretty hard today, but the Russell 2000 is obviously small cap, and it's testing multi-month resistance here around 2000. I think it would be interesting to see if this can break out and get even more juice for stuff outside of FANG plus.
Yeah, it's no surprise to see these markets pulling back. I mean, especially the S&P and the Qs. Guys, the run has been magnificent. So I
Yeah.
hope nobody is super surprised that this is happening.
Yeah, and when you look at, I mean, just from the start of the year, I mean, that was basically the bottom, and just a really epic run in the indices overall. And today's pullback, even though it's like 2% in the index, is really just a blip on the radar. But Trav, actually, the theme of today's newsletter was be fearful when others are greedy. And you made a point here that people have been getting greedy. We're now in the extreme greed side on the fear and greed index. What else do you want to dive deeper into about this topic?
Yeah, I mean, it's another example. We try to stay ahead of the trends as much as we can in markets. And, that includes things like LK99, which we try to put on people's radar at the end of last week. I started this week off trying to put on people's radars, especially in the community, when I did our update on Monday before the markets open, or right around when the markets opened on Monday. I said, beware of a big pullback and be prepared for a big pullback in stocks. And also just think about your profit taking plan, because I do think it's highly likely we could get a pullback. When the Qs were up 43, 44% year to date on Monday, not only is that a very high level historically, but the idea that you want to be fearful when people are greedy and greedy when people are fearful is always in the back of my mind. And I do think looking at things like the D-SPACs that have been performing, some of the tech stocks that have been going parabolic, some of the AI names that have been going up on hype, even though the fundamentals aren't necessarily that great in their business, the stuff like C3.ai that I just mentioned, all of these signs were very reminiscent of what we saw in the 2021 timeframe. We're seeing a lot of short squeezes. We're seeing a lot of junk rally. So all of these things together, all of these pieces of the puzzle were kind of starting to make me wonder if we would get a big pullback. And I'm not saying we're going into a bear market again, but what I was saying was, to our community members, be prepared for a pullback. The other thing, of course, that is on the table here is a rise in longer term yields. And I think I called this out before anybody was really thinking about it this week. And here we are today on Wednesday, and the stock market's finally pulling back on this. But the 10-year and the 30-year long-term bond yields have been rising over the past few weeks. And yet the markets were kind of shaking it off. And I was looking at that going, that actually could be the catalyst for the pullback, is if these yields hit new multi-year highs, because long dated bond yields in particular will tend to move inversely to stocks. So if we get a big rise or a fast rise in long-term bond yields, that can cause a big pullback in long duration stocks like your tech stocks, your futuristic stocks. And so basically, I wrote about that in the Daily Doe, and it published today, but I wrote about it yesterday. So pretty interesting timing there. But again, we're trying to stay ahead of trends, ahead of what's happening in markets. Everyone else will be able to tell you what happened after the fact in markets. We are always trying to plan for what could happen. We're not like perfect predictors of the future in markets, but what we try to do is think a couple steps ahead and think about how do we prepare ourselves for what other people in the market are not preparing themselves for. Mm-hmm. So that's essentially where I'm at with this. I think we could see more pullback if bond yields continue to become untethered. So I think ultimately that would be a buy the dip opportunity if we get a real healthy pullback, because I'm not predicting we're going into a new bear market. What I do think could happen is higher rates create a situation where we do get that pullback. And then, the Fed finally decides to do their pause and people kind of stop freaking out about yields at some point, and that pullback becomes that buy the dip opportunity.
Yeah. And if we take a look at the chart, I'll just do some quick TA here, like on the NASDAQ. We've basically been in an upside channel for the entire year. And if you look at this as basically one major run, if we run a fib retracement level, you can see there's actually quite a bit of room to the downside. We've got not only the sweet spot retracement zone significantly lower, but we also have the 100 period and the 200 period moving average, and we've got a retest potential of the multi-year resistance breakout. So, I think there's absolutely downside potential and would still be healthy, right? So from the current year's high, I mean, we could be down, 10, 15, maybe even 20% from the yearly high and still be in a technical bull market. So yeah, I think it makes sense. When things are overheated and people start to get greedy, what usually happens, the market shakes it out, runs stops, pulls back, scares everybody out, and then continues moving. So let's talk about though, okay, so that's the technical side. What has earnings been doing through this higher interest rate environment? And what do you guys forecast based on this?
Actually, you moved right into what I was about to talk about. I was basically the FactSet earnings data is showing that so far this quarter we're estimated to see a 7.3%. Is it 7.3 decline in earnings growth, right? So when you go, what we like to do is look at the Yardeni estimates as well. And so you take that and you know that 7.3 is in there for Q2. And then you look at the Yardeni estimates for 2023. You've got
And
Yardeni.
Nick, real quick, for anybody that doesn't know, what is FactSet and what is
Okay.
Yardeni, and why do these
Yeah.
numbers matter?
So we use both of these a lot. FactSet is they release a lot of the earnings insights. So like they compile all of the earnings data from all of the reporting companies, and they give us these beautiful charts and these beautiful, estimates. And so it's free. You can literally Google FactSet earnings insights, and anybody can pull these up. So this kind of gives us the overview of what's going on in the earnings season as earnings season goes on. We still have a lot more to go, but we've had a lot of the bulk of it so far. And then Yardeni, he puts out estimates, basically earnings estimates, and it's nice to compare. So we know what FactSet puts out, and then we can also compare that to what Yardeni is putting out, and that kind of helps give us an idea of where earnings are going to fall for 2023 in terms of us, looking at all the numbers and choosing which one we think base case and best case, right? So in 2023, it looks like FactSet is looking at like 230 a share or 230 per share for earnings. So Yardeni is estimating 225 for 2023. And then the consensus is way lower at 217, give or take. So what we can kind of take with that data is we've got 3 different entities giving us 3 different end of year estimates for earnings growth. And then we can kind of use that to calculate where we think the stock market, the S&P 500 can kind of move based on that. And what I was going to say is looking out at 2024, we are first of all, 2023 looks like we are going to see growth for 2023. Earnings growth was not, I think we were looking at like 0% to 3%, something along those lines for the full year. And a lot of people were thinking, oh, well, growth will be negative, right? And they were worried about that. But it looks like it's possible that we could see a little bit of growth there. Not a lot, but maybe a little bit. But 2024 is where I'm looking at right now. And I'm thinking about that buy the dip scenario that Travis was just talking about. He was talking about, NU, the market could pull back here. And what does that demand look like if we see the market pull back? And if we look forward, which we know the market likes to look forward, it looks like 2024, we're expecting earnings growth of, call it 240 to 250 estimated. That's growth, right? 2024 is for sure showing growth. So what we can do is we can look at where we think the market will pull back from a technical level. And in my opinion, I can see looking forward to 2024, how a lot of people are going to want to buy the dip, whatever the dip ends up looking like. So I know that was a very long-winded explanation of why I think there could be demand in this market on a pullback. But I don't think a pullback necessarily is going to mean we're going into a bear market and things are destroyed. In fact, according to what we're looking at, things are expected to get better. And so that's, looking at it, I think that it could be a buy the dip scenario for a lot of people.
Yeah. Great points, Nick. I'll just add a couple minor points there on top of what you said. There's a couple things to note there. With earnings, obviously, we do care about what companies are reporting now, which is essentially in the recent past of what they just earned. And then also we care about guidance and future earnings. And so really the market mostly wants to know about future earnings because the market is forward looking. And we have a negative 7% earnings growth in aggregate for this quarter for S&P 500 companies. But again, for Q3 and Q4, the market is now forecasting earnings growth for the first time in a couple quarters. And so that's what bridges us to, that kind of positive future scenario. And just a couple other things to point out as well. We've had about 80% of companies beating their earnings estimates so far this quarter. And that's a higher beat rate than we've seen over the past, I would say, 5 to 6 quarters, and higher than the 1 and 5 year averages. So companies are beating their earnings estimates, even though or again, earnings are in decline just on aggregate. But actually, if you look, 8 out of 11 sectors are even growing earnings in Q2. So it's really being held down by energy and healthcare and materials. So there's a lot of positives kind of underneath the surface, even for Q2 numbers. So we're seeing a lot of companies beating those earnings estimates. Now, caveat there too is that fewer companies are beating revenue estimates. So on the earnings side, companies are delivering better than expected earnings in a lot of cases. But on the revenue side, it's a little bit lower than historical averages. So a lot of this earnings growth that's happening currently, and I think even in the next quarter, is coming from efficiency and cost cutting, which is exactly what we saw in the tech sector. So the question is that sustainable? Will we get the 2024 earnings growth that analysts are projecting? Because it's probably not going to come from cost cuts alone. At some point, companies have to start growing revenues again. And so that's what we'll be looking for here through the balance of the year is, are we still in that resilient economy? Are companies actually going to be seeing revenue growth? Because they're going to need that, I think, to sustain earnings growth next year. So yeah, I think overall, I would characterize this earnings season as a little bit better than expected. We are seeing earnings estimates for the back half of the year still increasing a little bit and certainly positive. So those are overall good signs, but we need to see companies really delivering revenue growth through the end of the year to help power the earnings growth for next year.
Well said. I think we can move to crypto because they have been trading so correlated on average over the past couple of years, but more recently we've seen Bitcoin and all alts really start to kind of trade with a mind of their own. And past couple of days have been pretty choppy, but we're still at kind of a major support level here for Bitcoin. So I just wanted to dive into some of this. This 31K zone we've been talking about for over a month now, and we've really just been kind of trapping on both sides of the market. As of yesterday, we bounced down, tagged the 100 period moving average, which was also the 50% retracement and the prior pivot high from late May. So even though the market's choppy, it's still kind of respecting price levels. And the Bitcoin dominance is still holding up around 50%. Alts are still underperforming. I think one thing that is worth pointing out is the fact that, back here on July 13th, when the Ripple news came out, the market had a really big knee-jerk reaction and alts all got a pop and everybody was like, oh man, this is game on. But you'll notice ever since that single day event, alts have just been fading off. And another big thing that actually happened this week, we can talk a little bit about this, is the Hex lawsuit. So the SEC finally went after Richard Hart and the Hex and Pulse stuff. Look, I'm not going to get into my opinions on this project. I know that, there is a very strong cult-like behavior that we typically see with the Hexicans. The people that believe this project is legit are going to believe it's legit. The people that think it's a scam are going to think it's a scam. I don't think I'm going to convince anybody to change their minds. The only thing that I would say is if you're undecided or you don't know what I'm talking about, go check out the brief that I wrote for today's Daily Dough, because I go into detail about why I think they got sued and how the project works and how it does mimic some of the criteria that are typical for a Ponzi scheme. Now, again, is it a direct Ponzi scheme? It's arguable. Is it a scam? I believe so, but I can tell you that, again, I'm not going to change anybody's minds. Just go back. There have been hundreds of interviews and debates about this. I guess the truth will come out in court. The SEC is alleging that Hart used a bunch of money to buy stuff like the world's largest diamond and a bunch of designer clothes and shit. It's a very strange situation, but I think this is just a lesson of how if you make claims about earning 40% a year and you call your investment product basically a CD and you market it the way that you did and you literally do mailers bragging about price gains, yeah, that makes you a big ass target. So obviously no surprise to see the Hex token is down huge this week. And it's down, basically 99% from the all-time highs back in 2021. just be careful out there, guys. This is why I don't quote unquote invest in a lot of altcoin projects. I trade them with the goal of accumulating more Bitcoin and fiat. And I know I've said that on pretty much every show for the past several years, but I still just want to get people's minds around this idea that trading, all that really means is you're disciplined with entries, exits, and position sizing, and you don't become a cult member like a lot of people do. And it's happened with the Bitcoin clones. It's happened with a ton of different alt projects that are now dead. And that's all I'll say about that.
Well said. I think we've beaten that drum about investment cults a lot, but we'll keep beating it because people keep falling for it, right? But when has an investment cult really worked out for anyone long term? I can't think of many cases at all.
I was thinking about this yesterday, how, all of the old school cult leaders, they had it wrong, man. They were trying to rope people in by getting them to believe that there's some like spiritual figure. Really, the only thing you have to do to make people like worship you and look past all of your shortcomings is to give them a financial incentive to do so. Think about it. It's like, it doesn't matter how big of a douche you are. If people believe you're going to make them rich, they're going to worship the ground that you walk on. Some people, I should say. But it's just been very strange to see. I mean, I've been in crypto a long time, and I've seen this happen so many times, not just from coin founders, but also influencers and stuff. And this herd mentality, or this like follow the leader mentality, it will get you wrecked in the space. You have to learn how to think like a contrarian and to look past the marketing and the bullshit. And I don't know, it's just so many people get roped into this stuff. And look, we can see another example of something that's been happening that I think is dangerous is the whole WorldCoin thing. What was it in Kenya? They basically just suspended WorldCoin activity because they're worried about exploitation. And I think this is actually a pretty smart move. But there have been pictures floating around of like hundreds or thousands of people standing in line waiting to get their eyes scanned by this orb thing, and just very, very creepy. But all you got to do is offer people a little bit of a financial incentive, and they'll come running and they'll worship the ground that you walk on if you can make them believe that you somehow have the key to making them rich.
I was thinking about that after we talked about it on the last show, and I was like, a lot of things have our eyes, though. Like our phones have our eyes, like Apple and Clear Me, and I guess it's not that crazy that someone's scanning your eyes, but WorldCoin, yeah, I mean, I don't know how much I'd be trusting that, but it's out there, Yeah,
I mean, look, biometrics are absolutely a way to verify identity, right? And I think it has a place, but do you really need a crypto token? Do you really need a shitcoin attached to it? I don't think so.
I guess that's the part I don't fully understand, is what is the point of the coin? What do
to enrich insiders?
Is it are they hoping that it's going to be like the next Bitcoin and the value will go up because people just think having people's eyes is valuable?
Well, the marketing pitch is universal basic income and giving something free to people, which they're doing, right? They're giving these tokens away. And so there's a carrot, right? People are going to chase free money. It's just like airdrops and stuff. But with this, it's strange that they're tying that to a token. I mean, look, they're creating the quote unquote problem with AI, which makes impersonators and the need to verify someone's identity even more important. And they're trying to create the solution, which is this token in a way, but it's just very flawed.
Do we have an LK99 token yet?
Dude, let's do it. Let's launch it.
I have so many WorldCoin questions. I won't go there, but
yeah, we'll do a masterclass on it or something, just to show the risks and the potential rewards. And look, even though I think the project is creepy, like I said last week, I will trade this thing if it actually holds up.
Yeah, can we see this chart?
Yeah.
That'll help give me some perspective. Like, do you have to scan to be able to sell your WorldCoin, or can you transfer wallet to wallet without scanning it? And
No, to get your free tokens, you have to scan your eyeball. Anybody can like download the app. Like there's a smartphone app and it basically works as just like another wallet. You can buy through, so you can set it up as an on-ramp to fiat, but I think the goal is the insiders and the VCs that invested in this, they want people to view this thing as not just a speculative asset, but as something that people are actually going to hold their wealth in. And I, anytime there's a new listing like this, I never trade it right away, but it is showing a potential accumulation range in between like $2 and $2.50.
Yeah.
So if it can hold up for several weeks and months and we do get a bull market, yeah, I'd trade this and I would extract value out of that ecosystem. But there's no way in hell I'm holding this thing long-term.
It's obvious that speculation is back right now in these markets. I mean, at least in the stock market. Maybe the altcoins aren't feeling it, but like speculation is back. People are still thirsty for it. So yeah, I can see that. I can see that in the chart, how people could trade.
People want yield, right? People want gains. And so they're always going to be chasing something. And the danger right now with alts is they're not back. Like if you look at the price structure, we've been in a confirmed bear market really since early 2022. But we've just been making lower lows and lower highs. There hasn't been a convincing shift to altcoin season. Now, if the crypto market cap goes from like 350 billion and then we start to get up closer to 500 billion, yeah, I think that means we have another alt season. But again, with the regulatory pressure and just the environment that we're in, I just don't see that happening. Now, do I think all alts are going to go to zero? Not all of them. I'm just being way more selective with what I'm trading and even interested in holding for a short-term swing trade. All right, let's talk a little bit about something that I thought was pretty interesting. Uber, for the first time, just flipped to a profit.
Did they? I haven't looked at the report yet. So
they did, and the stock basically forecasted this, late last year, early this year, because the management team was kind of telling the market that they were doing this and focusing on efficiency and finally pushing towards positive profit margins. So good for Uber. They did it. The stock has worked. I don't love the valuation here, but this is just a case in point of what we talked about earlier, where a lot of the corporate earnings growth this year is being driven by efficiency and cost cuts, which, by the way, was sorely needed. I mean, especially in the tech sector, things had gotten just extremely inefficient. And we saw the videos, we saw the TikToks last year, right? Day in the life of people eating snacks and getting no work done. And there were thousands of these people at some of the big techs. So, but the question then becomes, what does the long-term look like for these companies? I think Google's even started increasing their job positions again. I'm like, already? Like, you guys finally got some operating leverage, and now you're posting more job postings again. So we'll see what happens. But yeah, good for Uber. Good for Uber. Lyft's still in the dumps. Lyft is a very distant second now. But if Lyft could actually make some progress, that could be an interesting stock at some point. But it's
tough. I mean, Uber's got that super great brand awareness, and just whenever you're thinking about it, you go Uber. I don't really know anyone that uses Lyft over Uber. I mean, I'm sure people do, but I don't hear it.
Yeah, Lyft has their super fans for sure, and yeah, but I think Uber's outcompeted them certainly, and it's like a 90-10 market share or 80-20, something like that. It's
and they have Uber Eats too.
Yep.
Guys, we've got a few questions. Why don't we go ahead and jump into those?
Let's do it.
All right. First question: how to stay consistent with investing money instead of spending it all when you have a lot of disposable income? Mindset or habit tips? Nick, I'm going to kick this one to you.
Well, congrats on having a lot of disposable income. That's fantastic.
That's half the battle.
That's half the
right.
battle. I say I call that your cash flow, right? That's cash flow is queen. Cash flow is whatever you've got left over after paying your bills and your taxes and all of that. And a lot of what comes from overspending and kind of recklessly spending your disposable income is just not having your goals properly set up and aligned. If you don't know what you're working towards, it's kind of tough when you've got all this money and you're like, okay, what do I do with this? So that's why, you start with, okay, I'm going to invest 20% or whatever of my income. I'm going to save 10%. I'm going to put 5% in a travel fund. I'm going to take 10% and whatever, use it for charity or use it for going out and entertainment, whatever. Like, you have to decide what those categories look like for you, and if you can avoid spending your disposable income and investing more of it, it'll help you get to retirement faster. It'll help you grow your net worth faster. So I think that look at and see, what are you investing, and if you can invest more to try to make sure you have a nice nest egg put away. You don't want to look back, especially high earners that have a lot of disposable income. You don't want to look back and say, what did I do with all the money that I made? So I love the idea of increasing investing, bump it up, whatever your investing rate is, bump that up another 10%, maybe even 15% if you can. And yeah, just start there. It's all about goals. You have to know what you're working towards. Otherwise, you're just going to spend it all on fun things, because that's easy to do and it's fun.
Yeah, maybe one thing you could do is just like set a milestone. Like, hey, I'm at X net worth right now. My next milestone would be this. And then kind of create a map. Say, how much would I need to invest at what compounded rate to get there? And if you're just, shooting in the dark, it's like kind of hard to quantify. But if you have a milestone, like Nikki said, setting actual goals, I think that makes it a little more real.
Yeah. And knowing your numbers, knowing your savings rate, your investing rate, etc.
Yep.
Yeah.
All right,
I always
Alex
think
was
it's helpful
asking-
to put that in a spreadsheet. Sorry. Yeah. Just a quick tip.
No, go ahead.
No, I think it's really helpful for people to actually just do that exercise of putting it in a spreadsheet, and even forecasting forward like 5 to 10 years is also helpful. But yeah, just even getting the basics in a spreadsheet and seeing what that does, what that looks like when you're accumulating your wealth, projecting forward even just a few years is really helpful to kind of keep things in mind. Like, I have one where I break it down by spending category and major line items, including things like birthday gifts and travel spend and, basically all your necessities as well, rent, food, etc. And if you do that, I think that'll help you really think about the specific buckets and the amounts, and that can maybe help you keep from overspending a little bit too.
Yeah.
Yeah. Well said. All right. Alex was asking, what's the possibility of the credit downgrade being planned or planted by the Fed to try to get rates lower, closer to the Fed funds, and maybe close some gap on the yield curve, especially when there's little talk of monetary policy and the reasoning for the downgrade? That's not a completely crazy question, but I don't know. What do you guys think is the probability that the downgrade on the U.S. was planted?
It's an interesting question. I mean, the timing is definitely a little bit suspect. Like, why now and not why? Why wasn't it done like just before the debt ceiling resolution? Why wasn't it done then? I don't think the Fed would really necessarily want to have engineered this, because yes, you have a little bit of a de-steepening or an unsteepening of the yield curve, but it's not in the way that you would want it. You typically would want, the front end to come down to match the lower long-term rates, not the long-term rates going up to match the high short-term rates. So what we call that is a bear steepener, where the long end of the curve, and this is what's been happening over the past few days and weeks, is that the long end of the curve, those rates, which were pretty low, 3.5% just a couple months ago, those are now up at the 4+% range, which are now getting closer to the short end. The short end, of course, as we know, is up at 5.25. Actually, now I guess 5.25 plus. But you don't really want your long-term borrowing rates going up as well, right? You'd rather have the short-term rates come down to meet the lower long-term rates. So I don't know that really helps. I mean, the Fed would love to be able to borrow 30-year bonds at 2% rates again, or even 3% rates. They don't want to see that go to 4 or 5 or blow out. So, to the extent that maybe it starts to tamper down some risk taking in asset markets, yeah, I guess you could make that argument. But the Fed has a lot of ways to do that themselves without having to, engineer some sort of conspiracy with Fitch. But again, the timing is a little strange, so we can continue to speculate, I guess, what drove that.
Yeah. Camilo is asking, hey guys, thanks for the shows. I love them. Thanks for watching. I'd like to know if either of you have made a fundamental or technical analysis of Riot Platforms. Do you think it's a good company? Regards from Chile. What's up? So yeah, I've actually been looking at this on the technicals. Let me pull up the chart. So
Just
Riot
like
is
Bitcoin, kind of.
yeah, I mean, it's a levered play on Bitcoin, right? Actually, I think it was last week or the week before in the Daily Doe, I did a report talking about Bitcoin miners. So if you go to dailydoe.co and then go to search, I just type in miners. Yeah, this was like almost 3 weeks ago. Yeah, I was talking about how you could basically pan for profits with Bitcoin miners. And there was a bunch of charts that were setting up for breakouts. Riot was one that has broken out. And on the year, it's up over 600%, or sorry, 500%, and was pulling back. But you can see if you're watching the video here, it was making some very technical moves. And right now it's in another consolidation pattern. As far as an investment goes, I have not done any work on the fundamentals. Basically, the main way that I'll trade miners is breakouts during bull markets. So I don't typically hold these for months on end, but if I do ever trade them, I'm looking for short-term trades. It's basically like, again, it's like a higher volatility play on Bitcoin. So like if alts are dead or if they're not doing much, Bitcoin miners can be another place to get extra alpha. So that's my thought. Trav or Nikki, have you guys done any fundamental research on these or not? Not really.
I mean, I just that like glancing at the fundamentals, it definitely doesn't look good. It looks like something that does better when Bitcoin is rising, right?
Yeah.
Obviously, and that's kind of the play. The play fundamentally here is when Bitcoin's going up, these miners are in a better spot financially, fundamentally. But yeah, I mean, it is pretty highly shorted. That's something to note. So that could drive a move in a similar way of MicroStrategy. Like if Bitcoin broke out, the short interests could help fuel moves higher if that happens. But fundamentally, it's not a good look. I don't know, Trav. You've talked about these businesses before and the pros and cons, but it does seem like you're kind of having to bet on Bitcoin going higher.
Yeah, these businesses have a tremendous amount of operating leverage, and Riot is included in that. Essentially you have your end product priced by the market. So Bitcoin, your end product fluctuates around, and you can see that in the financials. This year Riot's revenues were down, as much as 30% plus a couple quarters ago. I think they were only down like 10% or so last quarter. But gross margins are very, very thin. You have like 10% gross margins, which in the most recent quarter or two doesn't even cover your operating expenses. So you're now losing money with Bitcoin at this price. Now, if Bitcoin doubles from here, your operating profit margins get actually nice and fat and profitable. But the question is for how long? And so these businesses typically, similar to other miners, will often trade at lower multiples. Now, right now, Riot's actually trading at a relatively high multiple. And it's been in a bull cycle. So yeah, as far as long-term holders, I don't love these business models. Too much operating leverage, big questions around what valuation multiple you'll ever get on these things, lots of risk, thin margins generally. So they're, again, like Chris said earlier, they're basically leveraged plays on the underlying asset of Bitcoin and Ethereum themselves. So definitely interesting. I mean, they're in my backyard here in Texas. Basically, they have a huge mining facility in Central Texas, but not really for me for a long-term investment.
Yeah.
Gotcha. All right. One more question. We can wrap it up. John was asking, can it be that the economy is moving along due to Bidenomics, building the economy from the middle out? You guys have any opinion on that?
I think that, fiscal is an important piece of the puzzle with the economy that we're seeing right now, right? Like, the government, I believe we just got news that the government's going to be issuing, what is it, like $1 trillion in bonds in the next quarter or something like that. Like, they ended up increasing how many bonds they're going to issue, their issuance. But essentially, they're spending a lot of money. They're doing a lot, and they're giving a lot of tax credits. There's a lot of tax credits going for the renewable energy side of things for the consumer and for corporations too. So I believe that there are certain industries that are benefiting more than others, but if Congress is spending and doing, then that's a plus for the economy as we've seen it happen. But it also can spur inflation too, depending on where that money is going. So I do think that the fiscal spending has something to do with kind of keeping things more resilient and afloat, but it's definitely not the kind of stimulus that we saw back in 2020 during the pandemic. That was quite different. That was direct consumer stimulus.
Yeah, you basically got the US federal government running about a 5.5% of GDP deficit, which is pretty sizable. Now it's down from where it was even just a couple of years ago, certainly driven by the COVID period and the COVID stimulus. And the question is it productive spending? And you'll have different opinions depending on where you are on the political spectrum. The Biden administration has been targeting very specific areas, like you mentioned, Nikki, like alternative energy, certainly, different areas of their priorities, I guess you could say. And the Republican side, they'll run heavy deficits as well. They tend to really focus on the top decile of earners and on things like tax cuts that run their deficit. And so their idea is that it's going to trickle down. Their idea is stimulate by making rich people richer and they'll invest in the economy, right? And so you have drawbacks of both approaches. The question is, if you cut taxes for the rich, do they really have high propensities to consume and invest? Is that actually going to trickle down? And there's arguments for and against that. And then on the Biden side, on the Democrat side, it's like, well, if you're putting money into certain areas of alternative energy, is it going to be productive? Is it actually going to lead to future economic growth? If you pay people more entitlements, does it really lead to a healthier economy? And then on the flip side of that too, with both sides having deficit spending, are we just giving it right back via inflation? So
Right.
a lot of different ways to measure this. I think it creates winners and losers along different parts of the spectrum in terms of wealth and income. And frankly, I try to not get too caught up in it because people have very strong opinions based on where they are politically. But as investors, we look at it rationally and we go, okay, 5.5% deficit. What does that mean for markets? What does that mean for bond markets, stock markets? Really, what we try to think about is in changes to that number. So if it goes from a 5.5% fiscal spending deficit to a 2.5%, then you take money out of the economy, right? And you create a headwind for the economy. And so we're constantly thinking about, is the fiscal spending increasing or decreasing? And that has an effect on our analysis of the economy. So, I don't know. The deficit looks like it'll be relatively stable until the next election. So for now, it's providing a little bit of tailwind to the economy and probably a little bit of inflation too. Whether that's a good thing or not, that's up
Which
to you to
is
decide.
supposed to be opposite. We're trying to fight inflation. So yeah. And the Inflation Reduction Act was passed. And so, yeah, interesting times.
Winners and losers. And the goal, of course, as investors is think about where you need to be and where you need to position yourself so that your money isn't deflating against everything else.
Yeah.
Yeah. This is why we invest. Exactly why.
Focus on what's in our control. Do we put our money into Ponzi-nomic scam coins? Do we put it into high risk superconductor tickers?
No.
Do we keep it in cash?
Maybe.
Do we invest in startups? This is why I love investing. It's a never ending game of possibilities and potential outcomes. And, I was thinking about this the other day. Like I bought a PS5 when my nephew was here, And I every year I try to get more into video games just because I want to stay kind of engaged with that, just to know what's happening. And I just can't find games that like keep me engaged. I find them all really boring now because I'm, when you compare like video games to investing, it's like, yeah, investing can be slower and like more of a long-term game. But when there's real money on the line and when you're looking at real problems, like just nothing in a video game really competes with that anymore. I don't know. What do you think of that, Tribe? Do you play games anymore, or is it kind of burnt out for you?
I dabble here and there, and during COVID, I got into a couple of games like Apex Legends, more fast-paced, quick games.
Yeah.
And I wish I had time for more games. That I don't have as much time these days, but yeah, I still love games, but I certainly understand the idea of the investing drug being the most powerful draw for me.
The problem with like Apex and stuff like that is like, unless you play a ton, like it's hard to even have fun because I just go in there and I just get demolished. I think I played it for like a couple days and I had like 0 kills.
Yeah, the skill gap just gets worse and worse too as the game has been released longer.
Yeah.
So is what you're saying pickleball is more fun than video games?
Yeah, no
That's
doubt.
right.
Is that what you're saying?
Oh, yeah.
There's been
Go
so
touch
much
grass.
shade. There's been so much shade on Twitter over pickleball. It's been kind of funny.
I mean, what are people saying? Like, what kind of shade? I know the balls can be loud, so like some people get pissed about that. But
It could be my algorithm, but I'm seeing tweet after tweet after tweet of people that are like, "Why do people like pickleball so much?" And
I think you have.
Go ahead.
Oh yeah, I think you have to play it to understand it, but I see the same thing as like people that haven't played it think it's like, oh, you're just hitting a wiffle ball. This is like poor man's tennis or whatever. And it's like, no, go play it. Like, it's not like you're going to go just pick up a racket and be good at tennis, but you could actually pick up a pickleball racket and be on a pickleball court, having fun with 3 other people and being pretty decent at it, if you've had racket sport experience. So I think go play it and you'll understand it. But yeah, there's a lot of shade from the haters and tennis players who don't like seeing their courts being converted into pickleball courts. And
the tennis courts are desolate. There's no one on them.
Yeah, nobody plays tennis anymore, man. They're all jumping ship. They're all coming into the dark side.
I mean, let's do something with these things. And I used to play tennis. I love tennis. I love it. I can't play it anymore because it's too physically demanding for me, but it's a great sport. So no disrespect to tennis players. It's just a lot harder.
So let's get outside. Let's touch some grass. Let's look for some opportunities. Let's see if this superconductor thing is the biggest thing of our lifetimes or if it's a... I guess like you said, Trav, we'll see in the next few days. So as soon as something big happens, we'll throw it in the Daily Dough. And that reminded me, go to dailydough.co. Make sure you are on our newsletter. It goes out every Monday, Wednesday, and Friday. All 3 of us contribute to it every newsletter, every episode, whatever we call them. Yeah, guys, give us some feedback. What do you want to see in those things? What do you enjoy? What don't you like? What do you want to see more of? What do you want to see less of? At the bottom of each newsletter, you can give us a rating if you loved it, liked it, or hated it. And if you leave a comment, we read all of those. So let us know what you're thinking and seeing in there.
Absolutely. Share it with your friends too.
Yes. Share it up with anybody that wants to grow their dough. All right, guys. Well, Trav, Nikki, thanks for joining us and see you guys next week. Take care.